Hello, chart watchers, and welcome to this Friday, December 14th Decision Point show with your host, Erin Swenlin. For those of you joining me for the first time today, welcome to the show. And for our regulars, our Decision Point faithful, welcome back. I'll be showing you what's been going on this week. I'll give you kind of a look at all of the different areas of the market. We're going to do the DP scoreboards. I'll cover daily and weekly charts for the large cap indexes, as well as mid and small cap indexes using the ETFs IJH and IWM. I'll also look at what we call the big four. So we'll look at the dollar, gold, oil, and bonds. Finally, I'll look at the decision point indicators. Those are the Swenlin trading oscillators and the ITBM and ITVM. I'm also going to give you a little bonus. I'm going to show you our ultra short-term indicators because we did get an interesting reading today on those, so I'll be going over that one as well. And then as a bonus, hopefully I'll get to it, I have PMO analysis charts for the major indexes to give us a feel for if we're oversold, if we're, reaching that point where hopefully we could see a rally in the future, hopefully for Santa Claus to come by. All right, so let's go ahead. I'm going to take us right on in to our charts. And here we go. I'm going to start right up here at the top. Actually, I'm going to take you, I want to show you our scoreboards, and I think that's better shown through the PowerPoint. So let me go back there. Righty, there we go. So I marked up what the different signals are that we got this last week, and some really important ones did come in. As you can see, we have a short-term PMO sell signal that finally came in on the S&P 500, and we also got long-term sell signals. Now, the NASDAQ 100 had already capitulated and gotten a long-term sell signal back the previous week. And this week we've got the S&P 500 to join, and the S&P 100 2 days later joined. And as you can see, both the S&P 100 and S&P 500 ended up with sell signals on the PMOs on their daily charts. So we will be looking at those. The trend model signals are on the daily chart. You're going to get all of these signals on the trend model from the daily chart. The PMO signals are a little different. We have the short-term PMO is on the daily chart. The mid-term or intermediate term PMO signal is on the weekly chart. And finally, the long-term PMO signal is on the monthly chart. So that's what we will look at the end of the month. We look at those long-term signals, but they are not final until the very end of the month after the last trading day. So excellent. We will check that out at the end of December, which, oh my goodness, is coming so very quickly. But today we're going to pay attention to those intermediate term PMOs and see what is going on with those on the weekly charts, because that's what we want to do, is check out what's been going on all of these weekly charts. So let's go ahead. I'm going to start off with the Dow, and we'll just move on through from there. All right. So the thing I wanted to point out, especially on the Dow, was number one, we had our lowest close for the Dow since at least February, right? May, June. And, so obviously we're losing some very important support. And at this point, I would say the shorter term support that we've had in October and earlier in December, that's going to be failing. I would look for a move down to test that 23,500, the lows that we saw back here in February and April time frame. The Dow is taking a bit longer on its negative signals. Like you can see the long-term trend model signal. We look for the 50 to cross below the 200-day EMA. That, as you probably heard, mentioned plenty of times by talking heads lately, we have what are called death crosses. And that is when you have a 50-day moving average cross below the 200-day moving average. Well, as far as DecisionPoint is concerned, we use our EMAs, the 50 and 200. So I guess technically you could say 3 out of our 4 scoreboard indexes have death crosses. We'll look at those shortly. But the Dow is not quite there. It's also it's held on, like I said, to some of this support that we had back here in June. I think that is okay. But like I said, the weakness abounds, and I'm going to be showing you all of it. The other thing, confirmation, bearish confirmations on the PMO, OBV tops, as well as those price tops coming down. You don't see that so much on the others. Let's look at the weekly chart for the Dow. And here we go. One of the things you're going to notice on, I believe it was all of the weekly charts that I looked at for the longer term, there we go, for the weekly charts for our 4 scoreboard indexes, all of them have lost very long-term rising bottom support. I really have a problem with that. We never even came down and tested it during the first part of this correction at the beginning of the year. And now we have come in and we have broken below this rising bottoms trend line. So I think that's an important space to look at, but more importantly, those lows, like I said, back in January and March, that is where I'm looking for the next support area for the Dow. I suspect we will see those numbers. For the bulls out there, that's the place. If you're on the correction train, that would be where you're looking for that rise, that rally to come off of that area of those January and March lows. But if you're on the bear side of the camp, like myself, you're going to expect to see that breakdown eventually happen below those January and February lows. Should we see that if we're going into sort of that bear market mode? I think we could see prices move all the way down to test these tops back here from 2015 and 2016. And that puts us right around 19,000 for the Dow. Now, we could certainly see lower prices over the next year if this turns out to be a more extensive, extended bear market situation. All right, so let's move on to the NASDAQ. We'll look at this one next. It's currently holding on to a PMO buy signal. I believe it's the only one of our 4 scoreboard indexes that are holding on to a PMO buy signal. There's your death cross. We had that happen a couple days ago. I wrote about that one. So you can check that out in the DecisionPoint blog. And, we're seeing all these tops on the PMO below the zero line. And that's especially negative. That's especially bearish. Don't want to see that kind of thing, because then we look for these big declines. We're getting another top on the PMO. The only good news I really could say here is that we don't have the sell signal yet on the NASDAQ. And you know what? The volume pattern on the OBV actually looks healthy. So I think that could possibly support this just being a correction and seeing things move right back up to the top there. Weekly chart for the NASDAQ, let's take a peek at that one as well. It's still holding that support back here. Like I said, it's still above those lows that we saw earlier in February and March. Those are holding right now on the NASDAQ. One of the things I've been looking at, and you can kind of see on some of the other large cap indexes, what I've been looking at is possible, and this is really early, but I'm a chart pattern freak. I love to look at them. I love to find them, and my eyes go straight to them. I think we could actually be forming a possible very large head and shoulders pattern right now. We have this it's sort of a complex formation, but that could be your left shoulder. Here's your head. Here would be the bottom, to be part of the confirmation line here of the head and shoulders. However, I'd like to see a bit more on the rally side to bring up that shoulder, that right shoulder up a little bit more. Maybe a Santa Claus rally out there everybody's talking about. That would be good. However, if we do fail again at that rising bottoms trend line there, that could form that head and shoulders pattern, and it would execute if we got the breakdown below that looks like 6,400, 6,300 level. So I'll be watching that closely, of course, and letting you know about it. Point out on the weekly chart, we're seeing readings now on the PMO that we haven't seen since 2016. So a lot of problems out there. Like I said, the last show last week on Friday, I just wish I had better news for everybody. I would like to be wrong right now. Yes, I would very much like to be wrong. One of the few times, right, that I'd like to be wrong. right now we're looking at the S&P 100, and there is that long-term trend model sell signal, death cross, so to speak. That one came in on Wednesday, I believe, that signal. I didn't get a chance to write about it, but that one was added. And you can see we're still holding on to the short-term support here at about 1145. But again, I wouldn't look for it to hold PMO sell signal, and it is starting to head down. I think the only maybe sort of good news right here would be that, we have rising tops on the PMO and declining tops on price. And I think you could pretty much, you could call that a somewhat positive divergence there, a reverse one. And so that's good news. But on most of these other large cap indexes, we're just not seeing that sort of thing. All right, let's go ahead and we're going to look at the S&P 100 weekly chart. And again, now I can see, you can see a really long term, that possible head and shoulders that could be forming. But I really would like to see that right shoulder become more of a right shoulder instead of just a stopping point here. I'd like to see a little bit more of a peak on it. So again, we'll keep an eye on it. The IT PMO sell signal, of course, is still intact. And again, readings now reaching areas on the PMO we haven't seen since 2016. All right, let's get to the important one, right? The S&P 500. All right, still same kind of negative picture here. It does have that positive reverse divergence, though. We have those rising tops on the PMO and declining tops on the price tops. So like I said, that's a little bit positive, but we didn't see that on the Dow. Remember that no positive or reverse divergences there. So not everybody is on board with those divergences. So that's why I'm not paying particularly close attention to them at this point. What we are paying close attention to, of course, is support. Short-term support holding currently, but I'm looking at these areas down here at the 2550 area. I know that Tom on the Market Watchers Live, when I'm on the show, Mondays through Thursdays, and I talked to him, and he's right now just waiting for a drop below that 2550 level. He's just still not convinced this is a bear market. And, everybody has their thresholds. For me, it's these long-term trend model sell signals and these sell signals that we're seeing on the weekly charts with the PMOs, because as you can see, we don't get PMO sell signals very often on the weekly chart. And if you go and look at the monthly chart, same thing. So when I get those sell signals and it's combined with a long-term trend model sell signal, I can't ignore it. And so that's where I'm going with it. That's why I'm looking at a bear market situation here. All right, let's move to the mid caps. Mid caps and small caps look pretty much the same. Both of them have broken below those February lows, and this is why I have a little bit of heartburn with the idea that the S&P 500 and the other large cap indexes will be able to hold those February lows. We're losing it as far as mid caps, and you're going to see the same thing on the small caps. Look at how ugly the scooter and OBV are for IJH. So mid caps are certainly not participating here on any type of a rally. We're breaking below very important support here, and look at it. Also coincides with the 2017 top. So I think that was a very important area of support that needed to be held. It was not, and now rising bottom support. And I even sort of fudged it last time by using these two bottoms and bringing it up to the bottoms, to those lows we had earlier in this quarter. And it still broke down below those. So the next level, 160. Next level after that, 145 for IJH. All right, IWM. And here we are. Okay, with IWM, we're having the same problem. We had the breakdown below those February lows, ugly scooter, ugly OBV. We had rising bottoms on the PMO, and we had somewhat rising bottoms on price. And we got a little bit of a rally out of that. That is, that's considered a positive divergence. But now we've come back down, topped a second time below the zero line, and now have a sell signal. It's just not looking too good really for the mid and small caps. I thought the charts looked very similar. And here you are. You can see that drop below that important area of support from February, and it even lines up back here from the third quarter of 2017, and we've broken below that. So where is the next area? I think that if we're lucky, we could see it stop down here at 130 for IWM. More likely, this is a stronger area of support because we have these two tops that line up with it at about 122. So I'm kind of looking for that 122. We might see some rebound off of 130 if we can't get back up and into a rally again. But looking at these charts, I have a hard time believing we will. All right, ultra short-term indicators. Bearer of bad news on this one. We have very climactic negative readings. Okay, a lot of times that can be a good thing. Very negative climactic readings a lot of times will lead to a rally. However, that really needs to come along after a very long decline. That's when I would look at it as a selling exhaustion. We're not coming off of a long decline. In fact, we're coming off a rally from 2 days ago, earlier this week. And now we're getting those very high negative readings. You could see this one, these turned out to be a selling exhaustion coming off of that longer decline. And now we have only a small drop. We've gotten these two, well, obviously it hasn't been small, but we've had we're only getting two, we have 1 or 2 down days. So I would look at these as more of a selling initiation. I think we can get that VIX lower on that Bollinger Band, which means higher readings for the VIX. And that's what we need to see, because generally when you get those punctures of that lower Bollinger Band, that leads to short-term rallies. But I think we have a little bit further to go. We need to get back down to around 24, 25 on the VIX. Right now, I see that as a selling initiation in the very short term, meaning next week. All right. I think the short-term indicators, which I consider, over a week or two, they look actually pretty good right now. And the reason I say that, we have oversold bottoms and the short-term breadth and short-term volume indicators both bottomed and are rising, but the tops are in a positive divergence. What you want to see are the tops on the volume indicator rising. And if you see the tops on breadth sort of moving lower, that tells me there's some support, volume support out there for a rally. So I think there is a possibility here that we could see a rally, Santa Claus, however you want to call it, off of this 2600 area, 2550 area, get maybe a little bit of a rebound here, and that would follow through for those climactic indicators, I would say, and then they'll follow through with the short term. And now look at the intermediate term. Sadly, not looking good. See, there's a reverse divergence. Volume indicator moving lower, breadth indicator flat or moving higher. Typically, you get those, and the next thing you should look for is a decline. Right now, we're not seeing those divergences, but we are seeing negative crossovers on signal lines, and we're seeing negative readings now on the volume indicator. So all of that I look at as pretty bad news. All right, let's do the dollar, gold, oil, and bonds, and then I should have a little time to go over some of those PMO analysis charts. All right, one of the good things I saw here, and honestly, I can't believe I missed this chart pattern. We had an ascending triangle going on here. You can see those tops right here going across, and then rising bottoms on the bottom. That's a bullish formation. I've been bullish the dollar anyway, and then we got this little pop, little breakout, and trading above the highest reading we've had this week, so the highest close. So I think that's pretty positive as well, that we got that jump on UUP. Let's look at the weekly chart. And here we have the rising trend channel going on. Let's see if we can get over here. All right. There we are. I think that the weekly chart still looks pretty good for the dollar right now. We're holding that support level once we broke out above it, that 25.75 area for UUP. And now what I'm looking for is a rise up to that 26.50, 26.75 area. The rising trend looks good. The PMO, which had been trying to decelerate, is now starting back up. So I would say the dollar is looking pretty good. Well, right, typically when the dollar is doing well, we look for gold to do poorly. And, you know, honestly, there are some issues here with gold, but we've seen that there's been a decoupling between gold and the dollar. And what I mean is you can see right here that typically they're in almost a perfect reverse divergence, meaning when the dollar goes up, gold goes down by almost the same amount. However, back in October, we started to see it decouple. We started to see it now have a positive divergence, or I'm sorry, positive readings on correlation. And so when you have that positive reading, that tells me that gold and the dollar, they can travel together. And so we're holding just barely that 1240 support. I would like to see gold continue to hold it, but I'm a little bit, I think it's suspect because we do have the PMO turning over right now. We did close above 1240, but as you can see in the thumbnail, we did come down and almost reach an intraday low at 1235, which would have been well below that 20-day EMA. Right now, 20-day EMA held and 1240 level held. So we'll keep an eye out on gold, but I'm expecting it to do better. And you could see those discounts. The discounts on the Sprott Physical Gold Trust are lower and lower. And that means that we're seeing more bullish sentiment now on gold, and sentiment is contrarian. So generally that's a bearish sign. What I could suggest here, we have the PMO buy signal in the intermediate term. What I suggest is that we might have a test of the bottom of this long-term rising trend channel for gold. And that would probably bring gold down to, it looks like, I'd say probably 1220 level. So I don't think it would be that harmful. And as long as we can hold that rising trend on the weekly chart, I'll feel pretty good about gold. Right now, though, in the very short term, we might have to endure a little bit more downside. All right, oil and bonds. And we'll take a peek at those PMO analysis charts. The main thing I want to point out on oil, I am still bearish on it. And one of the reasons we are consolidating here, we do have a PMO buy signal, but you can see reverse flags. Here's WTIC, West Texas Crude, reverse flag. That's not positive. And then when you look on the weekly chart, that reverse flag is very clear. Reverse flags are bearish formations. If we get a breakdown below that 1050 level, we should expect a decline the length of the flagpole, and that is a $6 length on that flagpole. I'm not going to suggest we're going to see $4 on USO, but I am suggesting that we still could go even lower on USO. We could see the prices back down here at those 2016 lows below $8. And bonds, we are final. All right, bonds has a different look. I think you could make a case for a bull flag here on bonds. And, you know, the PMO has been looking very healthy. We did get a sort of a fake out, a head fake here, but the PMO came right back. The only problem I have right now is maybe that you could say the PMO is overbought. But when I looked at this chart more closely, where are the lows on the PMO? The lows are at about 1.5 or a bit lower. And the reading right now on the PMO is not even 1. So it isn't overbought. We could see it move higher. What does the weekly chart look like? Now, like I said, I've been very bearish on bonds, and I do believe this head and shoulders pattern is still in play. For me, if you get that declining trend line, declining tops trend line on your head and shoulders, and you get a breakout above that, that's when I start looking at it as a fake out or just a busted pattern. And we could very well see that because we just got an intermediate term buy signal. You can see we had that sell signal, but this week we ended up with a intermediate term buy signal for bonds. All right, so I wanted to show you really quickly just some of our PMO analysis charts. You can get these in the DecisionPoint chart pack, the market indicators chart pack. If you're an extra member or above, they're free. Just go to the chart packs in my account and you can add them and you can have all of these charts. So I'm going to look at the chart list in the market indicators 1120, and we're going to look at the PMO analysis charts. All right. What I wanted to see when I looked at these charts was oversold, really low readings, right, on all of these. And, you know, you've got PMO rising, that's your shorter term. You have crossover PMO buy signals. You have crossover, you have percent of the PMO above 0. We need to see these get to these very low readings, very oversold readings, and then we can start looking for a nice rally. But look what's going on. They're not oversold. Not by really a long shot. We are seeing them lower, moving lower, but we've seen much lower readings here for PMO analysis charts here. So again, we're not oversold enough. I think there is still more downside to go. And we have them also for the OEX and the NDX. They're very similar. Again, no oversold readings right now. We want to see oversold, very oversold readings, and that's what can bring us out of a decline. We're just not seeing that. And honestly, they're rising, but we're not getting any follow through as far as price. So I think of that as, you know, a negative type of divergence as well. Dow Jones, same deal. All right, you can see over here, I know that's a mess over there, but you can see we are not really at oversold readings. Certainly not right now. We did at least come down there close on the Dow. It looks a little choppy because, you know, of course, it's only using 30 stocks that are in the Dow. NASDAQ, similar situation. You know, we're not oversold here. Even the bottom on here is not oversold. So, you know, as far as PMO analysis charts go, we're not oversold enough. We could still accommodate more downside. So that's what I'm showing you. That's my thesis here, that we are in a bear market, and that is why. All right, so let me close this all out with some summary slides, and I definitely thank you all for joining me today. It's been great. All righty. Interesting. Oh, I know what I need to do. There we go. Now I can get that share. There we are. Okay. All right, so let's look at the summary right now. Large caps, we got those death crosses, rising trends broken. Small caps, mid caps closing below the February lows already. And then you look at our climactic indicators. I'm looking at a selling initiation in the very short term. However, I think short-term indicators look good enough that in maybe another week and a half, well, I don't know, around Christmas, we could see a little bit of a rally. And we have the positive divergence, I think, on those short-term indicators, which also suggest a possible rally. And intermediate-term indicators, bearish. Pretty much not looking good there. And as far as the rest, I'm going to throw these out here for you. You can rewind, I don't have enough time to really talk about them. But UUP, bullish, gold, somewhat bullish. And as far as oil, very bearish with those reverse flags. And finally, overbought on those others. So PMO analysis charts I just talked to you about were not oversold enough. All right, well, thank you very much today for joining me on this Friday, December 14th DecisionPoint show. I hope you'll join me again next Friday at 2 p.m. Eastern. And those of you who follow me on Market Watchers Live, and those of you who don't, go and see me on Market Watchers Live on Monday morning. Thanks. Happy trading.